How you doing today, guys? Bill here. I want to talk to you today about a stock that I feel has a bright future ahead of it. The stock is Paysafe, and it's in the fintech industry. I want to go over uh, some of the reasons I think it's at a really good price. It's dropped from as highs at $19, and it's currently down in the upper sevens, so just a little bit below 8, and it's been as low as almost $7 recently. Um, I'm going to show you kind of where the different places it gets its income from, where the many things it's kind of got its hands in. We'll look at its revenues, its growth, and this is a stock that's already profitable. So that's something that is always a positive. But before I get started on that, I wanted to give you an update on a stock that I had a review on not too long ago. Last week, Pam Trucking had its earnings call, and to say it blew it out of the water is an understatement. It went better than expected, and as a result, the stock jumped up 18% on the day. So it went really well. So we're going to take a look at what it did right, and then we're going to take a look at Paysafe, and we'll go ahead and get right to it. So as we can see here, Pam posted an earnings per share of $1.87 compared to the 52 cents per share in the same quarter of 2020, which was hindered by the industrial customer base that was from COVID related. That is a triple from its year-over-year earnings. The president, CEO Joe Vitorito said, "We had another record quarter for revenue and operating statistics at PAM. I'm excited to see the work that continues to go into making PAM what our customers and employees expect from a growing transport industry." He said PAM is still working through the obstacles brought about by a market that continues to experience high freight demand alongside severely constrained transportation capacity. We continued to see significant disruptions from some of our biggest customers in the third quarter, and it accelerated quarter over quarter, but we are getting better at navigating the disruptions, and that shows in our results this quarter. So they're learning better how to handle these disruptions that are coming along with it. So revenue in the truckload division increased 34% year over year to $127 million, as revenue per truck per week was up 30% at $4,512. And loaded miles were off 8%, with the average truck count inching 2% higher. However, the biggest lever in the quarter came from pricing, which more than offset declines in utilization. The revenues per loaded mile, excluding fuel surcharges, increased 45% year over year to $2.70. That provided the top line lift needed to drive operating results higher. PAM recorded a 77.9% operating ratio in its truckload division, 1,180 basis points of improvement. We also see that logistics revenue more than doubled in the quarter to $56 million. PAM also ended the quarter with $58 million in cash and marketable securities, double the balance at the end of 2020. Net debt has also been reduced by $83 million to $186 million this year. So they're gaining cash and they're paying off debt. They have generated $74 million in cash flow from operations so far in 2021, and their net capital expenditures have resulted in nearly $13 million of incoming cash. And their share repurchases have accounted for a cash use of less than $11 million so far this year. So they still are planning on buying more stocks back in addition to this. So there's just a quick snapshot of what they did for their earnings call. And like I said, they completely blew it out of the water. It resulted in Friday them jumping up 18% on the day. And I mean, while I expect there to be a slight pullback after this, I still consider this to be a buy, and it's only going to go higher from here. They just keep increasing revenue, and they just keep growing and growing while being profitable at the same time. Okay, now let's look at Paysafe. First, what is Paysafe? Paysafe Limited is a payment platform that enables businesses and consumers to connect and transact by payment processing, digital wallet, and online cash solutions. It offers digital wallet solutions under the Skrill and NetTeller brands, which enable users to transact from a virtual account. Paysafe generates most of its revenues by processing online payments for merchants and customers engaged in the online gambling and foreign exchange trading sectors. Paysafe focuses on specialized and high-risk verticals including iGaming, which encompasses a broad selection of online betting related to sports, esports, fantasy sports, poker, and other casino games. It includes emerging markets, which includes stocks, FX, and crypto trading, and direct marketing. Those streams there represented approximately $1.1 billion, or 74% of Paysafe's revenue for the year ended December 31, 2020. Now, if you want to know where I believe, and most people believe, the biggest gains for Paysafe is going to come is from the gambling market. As you can see here, it says CEO Philip McHugh stated that roughly 75% of online gambling operators use Paysafe for processing payments. This includes operators like DraftKings, William Hill, Betfair, Bet365, Golden Nugget Online Gaming, PokerStars, and more. So if you look at how fast just online gambling is growing, it's got to bring Paysafe, those revenues with it. And online gambling isn't even legal in most states. So as each state becomes legal, that's just more and more opportunity for revenue growth. Players of iGaming can use Paysafe's Skrill and NetTeller digital wallets and other services to play bets. We can see here too that Paysafe has customers of all sizes. So of all the customers that are using Paysafe, 9% are small with less than 50 employees, 25% are medium size, and 37% are large with greater than 1,000 employees. And then based on revenue, of all the customers that are using Paysafe, 37% have less than $50 million in revenue, 6% are medium size, and 33% are large, having over $1 billion in revenue. As I said before, Paysafe stock did tumble. It did fall quite a bit in August after it had its earnings, but it's because of the company's third quarter guidance came in slightly below analysts' average outlook. On the earnings call, they explained that it had decided to give up a number of the clients of its direct marketing business earlier in the year. It made that decision as a result of its evolving views of its market, as well as in anticipation of some upcoming compliance changes. So excluding the volatile digital marketing business, Paysafe's top line climbed 23% year over year in quarter two. Very impressively, the number of transactions recorded by its North American gambling business soared 72% year over year. So that's what I was saying earlier about its gambling business. That's where, the growth is really going to come from, and it's already started. So with the North American gambling business, the unit's revenues jumped 48% year over year in quarter two. Among its partners in the space are two top U.S. sport gambling companies. One was Golden Nugget Online Gaming, which was recently acquired by another huge player, DraftKings, and another was Flutter Entertainment. See that Paysafe has deals with more than 1,000 sports betting operators globally, according to the CEO. They also had 30% year-over-year growth in revenue in digital goods, crypto, financial services, travel, and integrated verticals. So as I said before, Paysafe has its hands in a lot of different areas. As I've said before, Paysafe is profitable. In 2020, the company's operating income came in at $19.68 million. Last quarter, it reported EBITDA, excluding certain items, of nearly $119 million. See here that 22 states now have legalized sports betting at in-person venues, and 14 of those allow consumers to participate online. So that's a number that's going to grow, and with each state, like I said before, that adds sport, online gambling, that's just more and more revenue for them. All segments combined, online gambling was worth $1.978 billion in the U.S. in 2020, and it's expected to grow at a 17.3% compound annual growth rate until 2026. So with Paysafe having 75% of the biggest online customers, that's just more and more revenue for them. So Paysafe went public back in March through a deal with Foley Transamine Acquisition Corp. It has since announced first quarter earnings for 2021, and they revealed promising growth in key digital segments. The company's expansion into the U.S. gambling industry yielded 66% revenue growth year over year. Similarly, its eCash segment generated 60% revenue growth for the same period, driven by a partnership with Microsoft's Xbox platform, on which Paysafe helps facilitate online gaming payments in over 20 countries. The company also expanded an existing deal with Coinbase Global, allowing American users to buy and sell cryptocurrencies within the Skrill digital wallet. It white labels the Coinbase exchange to power the customer experience, and the deal was a contributor to Paysafe's eCash segment performance. So you can see this is where this company is just going to keep growing and growing and growing. Next, as we get into some of the financials, we look at their current assets and their total assets. Their current assets are almost $1.9 billion. Their total assets are almost $6.9 billion. And then compared to their liabilities, their current liabilities are $1.665 billion, and their long-term liabilities are $4.143 billion. So you can see they have more assets than liabilities. It may not be the ratio you're looking for, but they are profitable. You have to keep that in mind. And also you can see they're paying off their liabilities. They had almost $5.5 billion last year, and it's now down to under $4.2 billion. Look at some of their evaluations here. They have a price to sales of 2.23, which is, almost 50% better than the median price to sales of 4.34. And their forward price to sales of 3.67 is better than the median of 4.01. And their price to book is over 56% better at 2.16 compared to the median of 4.93. Their revenue growth forward is projected to be 6.41%, which is below the median of 11.31%, but that's once again expected to start growing again because of all the eCash and the iGaming expected to go up. We look at their earnings per share forward, the long-term growth is expected to be 152%, and their levered free cash flow growth year over year is supposed to be 206%, while their operating cash flow growth is supposed to increase 41.5%. And then lastly, we look at some of their profitability metrics. Their gross profit margin at 60% compared to the sector median of 49%. Their EBITDA margin of 23% compared to 14% for the sector median. And their levered free cash flow margin of 15% compared to 12% for the sector median. So those are a few of the reasons why I think Paysafe is still at its current price, and I'm looking to add more of it. I have a couple hundred shares of it as we speak right now, and I'm looking to add more. The price that it's at is just, to me, it's just ridiculous. I don't understand why it's as low as it is. I never would have thought it would go that low, but I look at it as an opportunity. So I'm looking to buy more. And as far as Pam Trucking goes, it's done pretty much what I said it was going to do, and I think it's going to keep going and doing the same thing. It's just a company that's profitable and just continues to grow, and it's just going to keep growing. So anyway, that's it for this video. I hope I could be of a little value to you. If you could, just give me a like, maybe give me a subscribe, and I'll see you next time.